Hey guys. So I want to talk to you today about the Manhattan market report for April that just came out from Corcoran. And I'm going to take you through it and talk you through some of the points the way we do as professionals, right? If you do this every day, there are things when you look at stats like this that jump out. Um, and I want to point those out to you. So you're going to learn a little tutorial in reading like a pro market stats, okay? And as you can imagine also, so the market is down. We're in a lockdown period, 80% fewer contracts in April. Inventory was down almost 30%, and prices were down on average, well, I would say still between 5 and 10%, but let me show you the stats. Here we go. Okay, so this is the Manhattan monthly snapshot. I want to point this out. So price figures for condos and co-ops each declined with contract activity and skewed towards lower price points. Historically, price figures included in the Manhattan monthly market snapshot were based only on Corcoran deals, but in this case, because there's so little activity, they're including stats from other companies as well. So I would imagine that means that the companies are teaming up a little bit to share that data because nobody has enough data, which makes sense given the market. So when you're looking at this condominium segment of the market, the thing to check out is the percentage change over here. Average sale price was down -7%. Interestingly, median sale price was up 7%. I'll talk about that in a minute. And average price per square foot was down -7%. Average days on the market is up almost 41%. Listed inventory, like I said, was down 26%, and contracts signed were down almost 80%. So the thing about how can the average sale price be down 7%, yet the median sale price be up 7%? The way that that can happen is that you have, and is actually explained in this report, you have more of the sales were not in the neighborhoods with the lower price points. So the median sale price was higher because the sales that closed skewed more expensive, even though the total number was way down. Okay. Also worth noting, the average price per square foot of -7%. I think that the real number here, the number that's probably most interesting, is the -7% average sale price and -7% average price per square foot. That sounds and feels about right for the market right now. Another thing that's worth noticing, and I didn't mention this yet, was the difference from last ask to sale, which is down -4.7%, almost 5%. So this is important because what it tells you is what was the last ask that the seller was asking for and where did they actually end up closing. This will be a good number to pay attention to in the coming months. But that basically means that, we're seeing a negotiability of around 5% in sales. Now, there were a lot of these places that closed probably had long delays on them. Many of them may have still been gotten into contract prior to mid-March. So there's still going to be some shakeout when it comes to this, the closings. What'll be really interesting to see is how these prices numbers change in the next 3 months. Okay, so that was condos. With co-ops. Now this gets a little interesting and a little hairy when you start looking at it from a data perspective. Here we have average sale price is down -27%, and median sale price is down -12%, and that's year over year compared to last April. Okay, again, the difference from last ask to sale is down -4.4%, and so that is fairly consistent with the condos, whereas the average and median prices are not. So this is where I would just say that, I don't think that the co-op prices have dropped 27%. I'm pretty sure that that is not the case based on all the people that I've talked to, the people who are transacting these things, the lawyers and other agents, title guys. We're just not seeing those kinds of drops. There are occasionally big drops, but really the majority of them are still falling in that 5 to 10% range. That could change in the future, but for now that is the case. So I'm gonna say that 27% thing is chalked up to data and probably a very small sample size that can be affected by, you know, certain price points, so, or certain particular sales. Now the 12% on the median side, that suggests that is a more likely closer to the real number. So, you know, maybe co-ops have gotten hit harder than condos, and that would make some sense because co-ops, if you're looking to the future and you're saying you're a homeowner and you, or you want to rent, you're going to have a much easier time renting rather than selling a condo than you are with a co-op. Co-ops have a lot of restrictions in New York City, if you're not already aware. A lot of times you can't rent a co-op for more than 2 years before you have to move back in or use it, keep it as your primary. So that's the quick and dirty about the Manhattan real estate market. I'm going to do Brooklyn next. So that'll be in another video. And Queens will be, Long Island City will be on the docket as well coming up. Okay. Stay healthy, stay safe, stay distanced, do a little meditation. I find that super helpful. And I'll talk to you later.